Yeah, Tesla is the best opportunity. I've seen it since 2019. The same thing happened in 2019 where sentiment towards Elon turned extremely negative, and it really did not have any real relevance to the fundamentals of the business, which is doing phenomenally well in a very high gas environment. But remember, as we go into next year, we have what I call the Tesla Enrichment Act, or the IRA Act, coming into play, which really helps EV and solar makers like Tesla, not to mention launching new products, new factories opening. So the market is now completely divorced from the reality behind Tesla, and it's creating a huge opportunity for investors.
So therefore,
did you ever consider trying to go in on that deal with him, or be part of the funding of that as he was looking?
Hey, nobody ever called me to go in. I don't think he needed anybody's money. I might have done it if he called me. I might have put $1 billion in it because I really thought he was doing, hey, at the right price. I mean,
Tesla up 7% right now. Do want to mention that Dan Ives over at Wedbush Securities took Tesla off of his best ideas list.
Year to date, it's down 46%. That's on pace for the worst year ever.
In this video, Tesla stock rebounds hard after its recent collapse. Dan Bandwagon Ives exposes his intellectually rigorous process for determining price targets, reducing his Tesla stock price target because Twitter. Investing titan Carl Icahn says if he was given the opportunity, he would have invested $1 billion in the Twitter deal. And yes, there's plenty more Twitter drama. And holy shit, we finally did it, fam. The Patreon page, unbelievably, has cracked the global top 100 out of more than 250,000 accounts. My mind is blown. Thanks to everybody supporting the channel over there. I mean, I don't blame you. So much content. I'd sign up if I wasn't the one creating the content over there, not gonna lie. And yes, this is one of the final reminders you're gonna hear. Hurry the up and join Patreon now, or regret it for the rest of your life. I'm not even joking. I dropped another 2 exclusive videos on Patreon this morning before I even started recording this for YouTube, taking the total to well over 210 exclusive videos and counting very rapidly. So don't delay, join Patreon with the card in the corner or the link in the pinned comment.
Tesla up 7% right now. Do want to mention that Dan Ives over at Wedbush Securities took Tesla off of his best ideas list, still keeping an outperform rating on the stock, but cutting the price target to $250, basically because of the Twitter deal, which he calls a train wreck disaster, worrying that, quote, Twitter money pit situation will never end. He said that Tesla stock right now is in a penalty box. And he tweeted out today, we still believe in the long-term bullish thesis on Tesla. And he goes on to say, but this Twitter madness needs to end. Brand destruction is our biggest worry with this Twitter circus show.
Over on Twitter, this one from Dan Bandwagon Ives. And now, sitting on top of the peak of the mountain with Tesla in a massive position of strength, Musk has managed to do what the bears have unsuccessfully tried for years: crush Tesla's stock price by his own doing in what we view as a purely painful dark situation, cutting price target to $250. That's right, ladies and gentlemen. Tesla stock's down, therefore let's cut our price target to follow Tesla stock. I've long called Dan Bandwagon Ives for reasons that may become apparent in this very video. I really can't figure this guy out. I don't know whether he's an absolute moron, a genius, or somewhere in between. But previously, Dan Ives' price targets were chasing Tesla stock over the last 12-18 months higher and higher and higher and higher and higher. And every time it's the same random excuse that doesn't actually make any sense. So China's going better than we expected, therefore that's why our price target went up. Sales are better, price target went up. The truth is, I believe, Dan just wanted to stay in the news cycle and doesn't know what he's doing, so he's just, no, well, Tesla's up, better increase our price target, got to be close to the price. Of course, I could be wrong. After all, I'm just some obnoxious moron on YouTube, but I have noticed this trend, hence Dan Bandwagon Ives. Please don't look into his history in terms of recommending what investors did with Nikola stock. Now, I do understand if Ives was cutting his price target because there were signs that Tesla wouldn't be able to sell all the vehicles they were producing, that their margins were going to collapse to 12 or 15% instead of around 30%, this might justify the reduction in price target. But it appears that the sole reason for Ives reducing his price target to $250 per share is A, because of Twitter, and or B, because Tesla stock is down. Neither of which, in my opinion, are good reasons, given the fact they have literally nothing to do with Tesla's execution or their competitive advantage. Anyway, some interesting discussion in this thread. Gary Black chiming in. I've warned about Elon taking over Twitter for 6 months. Elon's skill set is not suited to running Twitter. Twitter is not an engineering/product issue. It's about growing ad revenue. Oh, Gary. Elon needs to appoint an ad man to run Twitter ASAP. Hopefully the Tesla board will get involved. Well-meaning feedback from Gary, but So strongly disagree. Dave Lee responding, Elon's skill set is perfect for fixing Twitter. Engineering, innovation and product revamp is exactly what's needed, and he does that the best. Risk, though, takes more time and energy than he originally expected, and that he gets heat and fallout from unpopular decisions along the way. This is a great tweet from Dave. Totally disagree. His skills are not additive to an advertising business. See, now this is hilarious because at this point in time, and by the way, in fairness, today, as it stands, Twitter is an advertising business. I think what Gary is failing to acknowledge is that Elon wants to change it into something other than an advertising business. And he wants this to happen ASAP. The guy is moving with an extreme sense of urgency. Twitter's dependence on advertising is set to end as soon as humanly possible. So the idea that Elon needs to bring in an expert who can stroke the gigantic phallus of advertisers and just keep them happy for a while? Whatever. Elon would rather rip the band-aid off, bleed a little bit more, and get done, because at this point in time, advertisers have Twitter by the balls. This is a huge problem for free speech. His skills fit perfectly with an engineering-driven manufacturing tech business. Gary Black rightly pointing out, 92% of Twitter's revenues come from advertising. It makes sense to shift the business model to subscription-based over time, but it's minuscule and someone has to pay the bills in the meantime. Why piss off the advertisers? Now this, Gary, is a great question. I feel I'm almost qualified to answer that myself. Why? Because every time I say fuck shit, or variations thereof, it costs me money. Literally pissing off the advertisers, because YouTube has advertising policies, and every time I say and so on, or talk about competition coming all over itself, or mention my love affair with Mary Jane, certain advertisers choose not to advertise on my videos, literally costing me money. Now, in percentage terms, it's not a huge amount, but it all adds up. Done pretty decent revenue on this YouTube channel in the first nearly 3 years. I think it's safe to say that this has cost me a substantial amount of total revenue by pissing off advertisers. I don't have to say shit, fuck, or bitch, and I know the consequences, and I still do it. Now, the question is, am I doing it wrong? I think things are going relatively okay, despite doing it wrong. And I totally see things from Gary's point of view. It is a legitimate question to ask. And the answer, Gary, is because Elon gives zero fucks. He has a much bigger mission and a much more important objective than appeasing advertisers over the short term. And yes, pissing off advertisers means advertisers get pissed off and stop advertising, meaning lost revenue. Just like Elon Musk coming out and pointing out that at this point in time, the Democrats are currently the party of hate. Pisses off a lot of people. Doesn't make him any friends. There's no upside for that comment other than Elon trying to point out the obvious to those few people who are receptive to hearing the reality. But he still does it because it matters. See, if you're ever unsure, Gary, or anyone else watching, why Elon does something, the answer is always because it's important and or it matters. Gary's perspective is purely from an investor's point of view, but Elon is busy pursuing important missions, not trying to appease investors or advertisers.
We need to talk about Tesla today. The stock, yes, it's up 7.2%. Year to date, it's down 46%. That's on pace for the worst year ever. The big news today is that it was removed, the stock, from Wedbush's best ideas list, the firm calling the Twitter deal an albatross. We've made it our call of the day. It's Dan Ives. And Brenda, you own the stock. Very, very interesting. Ives says that of Musk, he's essentially tarnished the Tesla stock story.
Now, this is an interesting clue into the way that Dan Ives thinks, or doesn't. The Tesla stock story. Does that describe anything fundamentally relevant about Tesla's business, execution, profits, revenue, margins, technology, competitive advantage, scale? No, it doesn't. I made some comments earlier about Dan Ives' price targets on Tesla stock, chasing after the stock as it was rising, and then random reasons that made no sense, like better than expected sales in China, even though there was no new information about China sales, like that. And I'm scratching my head going, this guy's just fucking chasing the stock price, isn't he? Now, we learned, at least according to this, my perception is that Dan Ives' price targets are entirely related to things other than the company's execution and their future earnings. Which, by the way, in fairness, if he's attempting to predict what investors will value Tesla stock at in the future, maybe it makes sense. A lot of investors are pissed about the Twitter drama and the distraction, so maybe this is fair. But to me, this seems a very intellectually dishonest and not at all rigorous way of determining your price targets. And a quick word on price targets, because a lot of people are unaware of this very important fact. I suspect that most investors think that a price target is a prediction from an analyst about what a stock will be valued at a future point in time. This is wrong. Did you just hear that? I did just say that, okay? A price target is not a prediction of what a stock will be valued at a future point in time. No. Instead, I quote, a price target is a price at which an analyst believes a stock to be fairly valued relative to projected and historical earnings. Did you catch that? Let me explain. A price target is an output of a valuation model whose inputs include earnings, revenue, margins, these kind of things, okay? A price target is not an estimate for what a stock will be valued at a certain point in time, okay? That's brain dead. Nobody knows what a stock's going to be worth. Nobody knows what investors will be paying for stock in the future. A price target is what a stock should be fairly valued at if it was being fairly valued based on the assumptions that produced the price target. It's important to understand this. The only universe in which a price target would be a prediction of what a stock would be worth at a certain point in time is if the stock market always perfectly valued companies and universally agreed on their worth based on their past and future performance. And clearly, universal disagreement in terms of what a stock is worth. As if, bro. Half of Wall Street has been saying Tesla stock's been overvalued since a $10 billion valuation, and the other half's been saying it's undervalued. So it's really, really, really important to understand this. Remember the period between 2014 and 2019, 5.5 years where Tesla stock went nowhere? In fact, it was actually down about 25% over 5.5 years. There were many people at the time, many analysts on Wall Street who had price targets significantly above where Tesla stock was at. These analysts weren't saying Tesla stock in 12 months will be worth this amount. They were saying if the market wasn't brain dead and knew what it was looking at and actually understood Tesla and valued it the same way I did, then it would be worth X amount based on X performance. This is why I published my Tesla valuation model exclusively to Patreon supporters at the investor level and above, so they can see the assumptions producing my price targets. My bear case for Tesla isn't a prediction of what Tesla stock will be worth at a certain point in time. Instead, it's what I believe Tesla would be fairly valued at based on the inputs in the model. Big difference. So unless Dan Ives has a cell in his spreadsheet, his valuation model that's producing his price targets that says Elon Musk being distracted with Twitter, I find it pretty hard to justify why the $250 price target out of nowhere. And boy, oh boy, would I like to see Dan Ives' model, if it exists. And one final thing on price targets, because I know people are going to ask the question. I shouldn't need to explain it because you can think your way through this, but just in case, you might go, Stephen, aren't you a gigantic hypocrite? It makes no sense. Why would you have a 2022 price target and a 2023 price target if not a predictions of what a stock will be worth at a certain point in time? Once again, I refer you back to the valuation model producing those price targets. Each year, 22, 23, 24, 25 has different assumptions in it, and those assumptions are for that year. Got it? Great.
And is starting to potentially impact the Tesla brand with this ongoing Twitter train wreck disaster. Those are strong words from a very significant supporter of the stock. What does it mean to you, if anything?
No doubt that this is a huge distraction with Twitter for Elon Musk. But I would say if we look beyond Elon and what's actually happening at the company, last quarter we had revenue growth of more than 55%. The company is selling every vehicle they produce.
Hey, who let this dickhead on here? She's making sense, reasonable, logical, rational, explaining that the Twitter noise has nothing to do with Tesla's execution, technology, products, their innovation, their wait times, their profit margins, their cash on hand, their competitive... It's almost as if she has a brain and she's using it, which I think should automatically have disqualified her from appearing on CNBC in the first place. Somebody should get fired for letting this person on. There's
still a great story to be had if we look at production costs with the ramp up of the Austin and Berlin facilities, which are specially made EV facilities, and that's different than the Fremont facility. So it means that they will ultimately be more profitable. But as those ramp up, we'll start to see that flow through. So I still think there's a lot to be said here about the underlying story of Tesla and their positioning in the market, which remains excellent. Really first mover within the EV space, and still have a very strong stronghold within the space. Even as we see ongoing competition come in, we just think that they've established a really solid base and are likely to still be able to see really great trends. There aren't too many large cap companies growing revenue at more than 50% in this sort of environment. So we think that's meaningful too.
All right. So Ives goes incrementally negative, we'll call it. Otherwise, analysts are still bullish. 290 is the average price target, 25 with a buy, 12 with a hold, and only 4 with a sell, even in what is, as we said, the worst year.
Another social media company that's gotten a lot of attention recently has been Twitter. I know it's not publicly traded anymore, but I'm curious just what your thoughts are on Elon Musk and what he's doing there. Today, he began to roll out gray check marks and then reversed that very soon afterwards. It seems a little bit trial and error of what he's doing, but on a pretty big stage.
Yeah, just in disclosure, I am one of the investors in Twitter, in the private company, and I have been involved with this. And, Elon needs a lot of help, and I've offered to help, and I'm still here to help. But this is, I think, well out of his range of typical types of business challenges that he normally face, which are much more engineering related instead of the nuances of media and entertainment. So I think that there's a very steep learning curve here, and he's unfortunately learning the hard way.
A bigger picture for Twitter is, do you see the sort of longer term goal here being getting Twitter's its books in order a bit better? Musk said it's, losing a ton of money every day. Is that the first goal, with the longer term goal being that it ends up being a publicly traded company down the road again?
Yeah, I think the intent is that Twitter would eventually become a publicly traded company in the future.
I'm not sure if Ross is kind of a little bit coy on this because he's an investor in Twitter, but Ross, we already know the plan is to IPO again in the future once the dumpster fire is fully extinguished and the company is completely turned around. So unless Elon changes his mind, you bet your bottom dollar, Twitter will IPO in the future. Give or take, my best guess, probably 3 to 5 years. Could be worst case, maybe 7 years, somewhere around there. Let's see what happens.
I also wanted to just get to a couple of your picks in terms of companies where you're seeing opportunity right now. We were just talking about Elon Musk, but Tesla is one of those companies that you're watching.
Yeah, Tesla is the best opportunity. I've seen it since 2019.
Completely agree. I think that makes Gary Black, Ross Gerber, myself, and everybody who's got a brain. I'm just kidding. No, I'm not.
The same thing happened in 2019 where sentiment towards Elon turned extremely negative, and it really did not have any real relevance to the fundamentals of the business, which is...
Whoa, hold up there, Ross. Hold up. Did you just say that Dan Ives is a moron? I think that's what you just said. Is that what he said? Did he just say that Dan Ives is a moron? Because sentiment around Elon Musk is irrelevant to Tesla's execution, and therefore changing a price target based on things to do with Elon Musk rather than the company's execution doesn't make sense. I think he just said, how rude. Ross just called Dan Ives a fucking moron live on air. Ross, menace, please.
Doing phenomenally well in a very high gas environment. But remember, as we go into next year, we have what I call the Tesla Enrichment Act, or the IRA Act, coming into play, which really helps EV and solar makers like Tesla, not to mention launching new products, new factories opening. So the market is now completely divorced from the reality behind Tesla, and it's creating a huge opportunity for investors.
Tesla stock currently divorced from reality? Did somebody say gigantic disconnect? Can you guys... I can. I can smell opportunity.
So I was starting to buy stock, and I felt I would try to get on the board of it because it was. I just feel it's. Look, I'm not going to be here and saying who can say something. Can people say nasty things? But I am saying that the manager of a company should not be allowed to decide who the hell should talk and who shouldn't.
1,000%. Agreed.
And then I was really happy that Musk came along because, I think he stood for the same damn thing. And I felt this is a perfect one for him. He's a lot richer than I am. And I'm not complaining, but he's a lot richer. And I felt that he was the perfect guy for doing it. And he didn't need the money. You look at it, if anybody spent the time to look at his balance sheet, saying, can I get the money? Can I get the money? That was, in my mind, complete bull. If he wanted to do it, there was no problem in him getting it. And so therefore...
Did you ever consider trying to go in on that deal with him or be part of the funding of that as he was looking?
Hey, nobody ever called me to go in. I don't think he needed anybody's money. I might have done it if he called me. I might have put $1 billion in it because I really thought he was doing... Hey, at the right price, the stock went down in the 30s. And then we bought it in the 30s, so we made a lot of money with it. I really don't know him. I just listen to the stuff he says. I think the guy's a brilliant guy. Some of the stuff I might disagree with, but I felt there was never a chance. This is a perfect thing. If you feel the way I feel about it, and the way a lot of people feel about it, these guys have no right to say, hey, look, if a guy gets on and he starts talking real trash, you keep him off. But not because somebody says something that disagrees with your politics.
Confirmed. Carl Icahn is a dangerous threat to democracy who believes people should be able to freely share their thoughts, opinions, and ideas as long as they're not harassing, attacking, or calling for violence upon certain people. Can somebody get this guy cancelled immediately? I feel unsafe. Please hold me.
Dan, let's talk about Twitter now. Those employees certainly under pressure last week on the back of those cuts that came. Now they're under pressure for a different reason, with Elon Musk essentially saying, you got to come back to the office.
Yeah, he's had this, anti-work from home kind of sentiment for a while. Started with Tesla, but now, he's taking it to Twitter, which now he owns, obviously. Twitter had a pretty, laissez-faire attitude towards work from home. It was basically a work from anywhere. Jack Dorsey at one point had said that he wanted to work remotely from Africa for a few months, and then Twitter's board basically put the kibosh on that, as did their shareholders, saying you need to be where we need you. But so the attitude there had been, very much work from where you can get your work done. Elon Musk is saying, no, you have to be in the office minimum 40 hours a week. There's going to be some exceptions for certain circumstances, people that, absolutely need to be somewhere else or just can't make it to the office for one reason or another. But, it'll be interesting to see how Twitter's employees respond to this.
Spoiler alert, the employees who actually work for Twitter, as opposed to get paid by Twitter to work and don't actually work, aka work from home, will be totally fine with this. Sure, I'll turn up to the office and work because that's why you pay me. Those who are entitled wankers, also known as useless fucking wankers, or UFWs for short, will be whining, complaining, calling Elon Musk a tyrant, and jumping ship to a much friendlier workplace where everyone can hold hands, sing kumbaya, participate in free yoga classes, enjoy a delicious warm breakfast and dinner, play ping pong, talk about all the incredible injustices they're currently facing in their extremely privileged lives, discuss potential policies of racial discrimination to fight racism that should be implemented in the office, send petitions around the company trying to force the owner to make a public statement about the current thing, because otherwise there's no statement about the current thing. Obviously the company's bad and doesn't support the current thing, and therefore I don't want to work for this company, and solicit feedback for which new emojis to include in one's Twitter profile to ensure everybody understands that they're a good person. So I think what I'm trying to say is, this is great for Twitter. This will help accelerate the exodus of the UFWs. I'm all for it. By the way, special shout out to those of you who are currently working from home, watching me on YouTube instead of working. I know there's a lot of you.
This is a slew of changes that we've seen coming from the platform. Just, the layoffs, getting rid of half the employees there. Now we have word that some of the heads of infrastructure security or IT are leaving. And then we have the problems with those check marks and the verifications. Now they're saying that any new accounts that are made before, on or after November 9th can't sign up for the $8 a month blue check mark, because people started making phony check marks or phony accounts with those check marks for everything from Nintendo to LeBron James. In fact, there was one for Nintendo that had Super Mario giving everyone the middle finger for a while, and Nintendo, rightfully so, was angry about that. So how do you stop something like that? How do you make sure that no one's going to make an account that says Joe Biden and says something in the extreme? So there's a lot going on here with not just the company but the employees and Elon Musk trying to get it under control with that Q&A yesterday. But I mean, it's just seemingly too much at this point.
Yeah, Dan, you have to wonder how morale is at the company in light of all these changes. I know you're staying on top of it. Thanks so much for that.
Question: how does one invent the first fully reusable rocket? Answer: by blowing up a lot of rockets on the way. And how does one rapidly improve Twitter? By moving with an extreme sense of urgency and blowing some shit up along the way. The hilarity, of course, many of Elon Musk's detractors and critics pointing and laughing that there'll be plenty of mistakes, errors, pivots, reverse courses. Something's implemented, then it's unimplemented. Something's announced, then it never happens, and so on. This is the price one must pay to rapidly transform a burning dumpster fire of a company. So I think it's safe to say the next few months there's going to be a lot of drama, huge amount of changes being implemented at Twitter, some reversed, some scrapped. The media will be having a field day, Elon's haters will be having a field day, and I'm sure there'll be many Tesla stock investors, a lot of them institutional, who cry in the corner because now big bad daddy Elon is too busy being distracted with Twitter that Tesla has forgotten how to produce cars. Oh wait, that doesn't really make sense, does it? Oh, speaking of not making sense, a special shout out to Dan O's $250 price target. I really would like to see that model, Dan. And now the word of today: regret. No, I ain't just talking about Tesla's stock at 52-week lows. Feel sad, repentant, or disappointed over something that one has failed to do. Something you are guaranteed to experience personally if you don't sign up for Patreon using the card in the corner or the link. I'm just going to leave that. You really should sign up to Patreon though. You will regret it. I ain't fucking around. A couple of days left and then you'll be like, oh, he stopped saying that thing about hurry up now. I wonder what happened. Oh, he was serious. #regret. So, see you over on Patreon, unless you got a regret fetish. Love ya.